Welcome back after a pretty tumultuous 2 weeks since we last spoke. Certainly one of the things that's been going around quite violently at the moment has been oil. And I think what we need to do is take a step back and look at what's driving some of this. So rising oil and energy prices have obviously had a negative knock-on effect for global growth, taking inflation up at the same time. You know, rising oil actually hits an awful lot of markets. So obviously what we see, these rises that we saw into the middle of June with the Russian invasion and everything have actually impacted global markets quite substantially. Then we saw the market sort of start to fall off. We saw inflation very high on the back of the higher oil prices. But since the falls in mid-June, they've given a bit of a welcome relief. They've taken the cap off inflation slightly. And this fall was very welcome. We saw the stronger dollar impacting commodities across the board, but oil in particular was suffering from what was deemed to be a potential demand drought going on because of the stalling in the global economy. So this last week, previous to that week, these falls were seen as quite encouraging. However, last week we saw prices reverse quite dramatically higher, sparking further problems for the EU and UK in particular, with their both having these energy crises, which don't seem to be going away, to be honest. And this spike back up in oil, as you can see on the bottom left chart here, up to the 7th of October, was quite damaging, to be honest. We are coming off from that. But if you look at this 4-hour chart since Friday, the 30th of September, the reason for this big rally back in oil was actually OPEC, and OPEC Plus had a meeting. There was some idea that they may consider an output cut of 1 million barrels a day, which is significant. The problem is we started rallying into that meeting. And then at the meeting, we actually heard that they were going to go for $2 million barrels per day cut. Now, that is just over 2% of global production. That's quite a big cut. And so off oil went and we took off. Very disturbing for markets again. This had a negative impact on risk assets. And oil closed up the week 17%. That is no small move, even for oil. So the danger here is that markets may be facing another supply issue for oil as we get these restrictions from OPEC trying to protect the price of oil. They want this price higher. This is a sizable production cut. There's no two ways about that. However, there is some counterbalance to this as we've been going on. So first of all, what does the OPEC cut mean? So OPEC Plus rebuked suggestions by the US that they should actually be increasing output. This is a real slap in the face to Biden. He actually returned from Saudi Arabia talking of potential production increases. And this decision from OPEC Plus has sparked an immediate and aggressive response from the White House. Quite what they're going to do with this, I don't know. There's talk of possibly banning exports of refined products to some of the countries involved. But this is beginning to become political, and a political spat over oil is not healthy for anybody. And it could actually take oil back up again if OPEC decide to get stronger with this. Now, part of the problem is that the US see OPEC siding with Russia. Now, Russia were the ones who suggested the potential cut of $2 million barrels a day. Now, that is, obviously irking the West to some degree. And I think this could actually progress to be a political issue with oil stuck in the middle of it. So that is a danger for risk assets. It's a bit of a danger for the idea of peak inflation, because higher oil, if we start going back up to 100 plus, then obviously inflation is going to start turning back up again. So there is a danger of US retaliation on this. We don't know what it's going to be. So any news on this, I think, is going to be pretty important, certainly when Biden's saying things like Saudi Arabia will face consequences for this OPEC cut. Where are they going to take this? What are they going to do with their exports? If there's export bans out there, that's going to be a supply issue again. Oil will probably go higher on the back of that. So we need to be careful of this politicalization of oil, because it could have a fundamental impact. Having said that, obviously with the slower global economy, there is a demand issue that is holding oil up as well at the same time. But it's very difficult to understand what the US can do with this. They can dip into their special petroleum reserves, which is known as the SPR for obvious reasons, to try and get prices back down. However, The SPR is at 38-year lows. They can dip into it further, but there is the danger that they leave themselves exposed to future problems with oil. So, you know, there is this political battle potentially brewing here, and it's something I wanted to flag, that hopefully you understand what some of the drivers have been for oil. And the Ukraine war is really not helping with the recent bombings of Kiev. You know, Zelensky now calling for more sanctions, more weapons. And there's this ongoing problem with Russia that looks like sanctions are going to stay in place for years to come, if not be added to as well. So again, the supply issue is still a concern in the energy markets, particularly for the UK and the EU, who stand most exposed to this. But generally, there is a risk that high oil prices start feeding back into inflation. So we need to monitor this pretty closely. So where next for oil? This is a 4-hour chart. We have seen the market start to drop off. This is, you can see this move, 6-7% here. The thing here is there's a demand issue as well. So against this supply concern, the market is also looking at the danger of a slowing global economy. The IMF has been warning that we could see global growth down to 2%. That is more or less technically a recession for global growth. And on that basis, demand could waver even further. We're still not seeing China really coming out with an aggressive recovery in their markets, and the demand from there is still weak. So this is the counterbalance I was talking about earlier to this oil rally, and we're seeing some of that take shape as we start to drift off again. But it's going to be choppy. It's going to be volatile. You know, the lower price influences are there, but so are the higher price influences there. There's going to be a battle. So volatility is probably, you know, up and down markets, wild swings. It's going to be difficult to trade. So caution is the main word going forward there. And, you know, don't use all your leverage in this market. It's going to be difficult to get it right and hold it. So I think wild swings suggest we need to be cautious in this market.